Morning. Come tell-y-vous. James says, hey, Wayne, yesterday was a quantum leap. Imagine you're talking about the day trading group. What was it specifically that was helpful? Alrighty. All right, you're probably going to get an email from me today to sign up for the oil trading class that we're going to start soon. We're just putting the last touches on the sign-up page. Should be good enough if you already know. I welcome you to visit the page. Consider signing up. One of the topics I thought I would cover somewhere in the course is carbon taxes and cap and trade models. If you're going to be an expert in the oil industry, not only do you need to know how it's dug out of the ground and moved around and sold as products, but how governments get involved to address externalities. And there are different models for the government to get involved. Cap and trade is one that's is very popular and is used in Europe, for example. So if you were going to have an intelligent conversation with another person in the oil industry, I think it would be assumed that you would know stuff like that, because it's sort of, you can consider it like a regulatory part of the energy complex. And you're like, yeah, I know a lot about oil, but I don't know anything about cap and trade. And I thought, yeah, we need to cover that. So that's how deep in the weeds we're going to get. One of the things I think you'll also enjoy, so again, this page isn't quite ready. It'll be ready later today and you'll get an email about it. But I actually want to cover the legal contracts. So for example, if they found oil on your land, what kind of contract do you negotiate? Well, what about Iraq? What kind of contract do they negotiate with Exxon? So on and so forth. So like, I'm telling you, we're going to get knee deep. You are going to be an expert in the oil industry. Jordan says mineral rights. Yeah, but let's go through the contract. What does that mean, mineral rights? It's so, I mean, we need to go through the contracts. So anyways, I hope you're interested in becoming an expert, not just in oil, but nat gas, and maybe we can touch on electricity, alternative sources, the externalities, the legal aspects, supply fundamentals, demand fundamentals, seasonality, and of course, busting out a chart, how and when to trade it, so on and so forth. And I believe over the summer, maybe as a complement to this course, I think over the summer, you're going to end up making, scalping and day trading of oil a pretty significant part of your trading as we lose volume and volatility in the Forex market, as we always do in the summer, what I call shooting at rabbits. So in the summer, we tend to take much smaller time frames into consideration, aka spending a lot more time scalping and day trading than we do swing and carry trading. And you're probably going to add oil to that because it will have a higher average daily range. It'll be more volatile. It'll give you more opportunity, more upside opportunity versus a euro dollar that might move 40 or 50 pips a day. In contrast, oil will probably move 2 or 3 or 400 pips if it was priced in pips relative to a euro. But just imagine if euro moved between 40 and 60 pips a day in a slow summer season, oil will probably do 200 or 300 pips. So you might be able to get your euro on, your yen on, but you might get some WTI on. Okay. Okay. So anyways, I hope you sign up. Once again, we're going to start in a couple of weeks. Join us. Let's go. All right. I guess we should start. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader. Been up many hours already. Just love it, man. I love it. This thing we call Forex. Being able to work inside of the world of financial asset trading, whether it's euro, gold, oil, Bitcoin, it's all good. And really, in many ways, as primarily currency traders, we're actually bond traders. So you might notice a relationship between falling yields and falling value of dollar. And you're like, oh, that's interesting. Maybe one has something to do with the other. Now, I hear the argument a lot where they say, oh, well, the stock market moved because of the dollar. The bond market moved because of the dollar. I don't believe that, because you don't sell a bond because of a dollar, but the buying and selling requires money. And if foreigners are doing the buying and selling, it'll change the value based on the supply and demand of that money. The money's either going into the United States or the money is coming out of the United States. So if a foreigner sells a bond and brings their money home, they right? They're selling the US dollar, because they're saying, you know what? They sell the bond, now they have US dollars, and then they want to bring it home, so they sell the US dollars to buy their local currency back. And so they're actually net sellers of US dollar, and you might say, oh, look at that. Dollar's weak today. You might notice maybe a foreigner sold a bond. Not because the dollar's weak, they weaken the dollar. Anyway, so we have to watch all these things. When people ask me about Forex, I say, oh, well, you just have to know everything about every economy in the entire world and accurately predict the future every single day. But besides that, it's easy. So welcome to this journey we call Forex. Let me know how I can help. I've been doing this for decades now. So I've learned a few things and I'm willing to share. It's the whole raison d'etre. We're going to use technical and fundamental analysis to make some trade plans today. Let me know what's on your mind and I will do my best to help. Okay. And by the way, James said he learned a lot yesterday in the day trading group. Quantum leap, in fact, I think is what he said. James, let us know what you learned. What was it? Okay. Awesome blossom. Besides these videos I do every day, and I've done that for almost 20 years, I was asked to write a book, by our community, so I wrote a book. The link is in the description below. I was asked to do free training courses, so I made free training courses. The link is in the description below. Created a community a long time ago called FX Bootcamp because I realized all the success I had in life before Forex, and I was fairly successful before. I've run companies of thousands of people. I've taken startups that were near death after the dot-com bomb. And 25 years later, I talked to a customer that's still using that service and they love it. Okay? Forex wasn't my first career. Many newspapers and magazines around the world had covered some of the work that I did, and I've actually been featured in things like the National Post, which is the biggest newspaper in Canada, for example, wrote an entire article on my journeys as an entrepreneur, all before Forex. And many, 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 many others. I have a magazine somewhere, if you remember Inc. magazine. I have an Inc. magazine, and they sent it to me with a sticker. It says, "You're featured in this magazine," and it's the Hot 100 Startup issue of Inc. magazine, which is kind of cool because I went to my favorite coffee shop, went to the magazine rack, bought the magazine that I was in, and read it, which is, again, as a young man, that was pretty awesome. And it had to do with me and somebody named Guy Kawasaki, who was an Apple angel, I think is what he called himself. Not an angel investor, but a lover of Apple. And so obviously this is way back in the 90s. So anyways, all I'm trying to say is I've earned a few gray hairs, been on a big journey. My second career outside of high-tech entrepreneurialism in the Silicon Valley was Forex. So I bring all of that and I apply all the good and the bad of that journey into what we call Forex. So I treat Forex like a business because I'm a businessman. Okay. Cool. So anyways, all I'm trying to say is I bring more to the table than just Forex, but I've been doing Forex for a couple of decades. So I learned a few things. Let me know how it can help. So join FX Bootcamp, for example. Take the summer school, for example. I think you'll have a lot of fun. And then lastly, but most importantly, I would suspect, is since we're all traders of one kind or another, let's say you don't even trade Forex, you trade, you just like trading oil, you just like trading gold or something. Hey, you're still going to need a trustworthy, ethical broker that has fast execution speeds, low cost, they pay you good income, some of the best income in the industry, in fact, and that would be tradersway.com. The day they really, truly were put to the test and earned my loyalty and respect was the day that the Swiss National Bank pulled the plug pulled the peg on the euro, right? And FXCM in the United States went out of business. Alpari globally went out of business. They lost hundreds and hundreds of millions of dollars. And Trader's Way was perfectly fine. And I thought, that is epic. So, tradersway.com, open up a demo, and allow them to earn your loyalty and respect like they earned mine. Okay. Okay, here we are. We are now one standard deviation below the mean. Okay. This is another critical moment last night in the day trading group. James says, setting goals and tracking your progress. Oh, I see. Track your performance and find one specific area. Okay. Well, by the way, that's in my book. Cool. So you're talking about yesterday's live stream, not the day trading group. Okay. How many people posted their goals on the recording yesterday. It was something I asked you to do. I suspect maybe 5%. Let's see. James posted actually quite a few things. Good for him. Let's see. No. Don says he'll work more on reviewing trades. Maida said her commitment is to get better at price action by doing simulations on TradingView and reviewing trades I took this month. Great. Remember, the point is to identify strengths and weaknesses, not just to review them. Again, my whole, 1/3 of my book talks about exactly how to keep a journal properly and how to review your trades properly. Okay, actually, very few people put down specific goals they're going to work on. All right, that makes sense. Okay, good. Well, right? Oh, you don't, Burns, you don't have to apologize to me, right? It's your trading. Shirag says, hey, Wayne, one day you'll be publicly famous for all these webinars that you do. I don't think most people care. So I do it for those that show up, and I do it for myself. These webinars are an important aspect for me as a trader because it keeps me laser focused. One great example, this oil training course. I know this sounds like a plug, and it kind of is. But nonetheless, I know enough about oil. I've traded oil well enough. I've taken courses at Harvard on the entire oil industry. I'm not uneducated. So I've been trading it for 20 years. I've been tracking details for 20 years. I passed the Series 3, which had to do with, many of the questions had to do with oil futures, oil contracts, cracks and fracks, how to hedge them, how to trade them with futures, how to trade them with options, how to hedge with options. And like I have some background. But then you inspire me, or maybe I inspire myself because I think you want this. And I say, you know what? It's not enough to know a lot. I want to become an absolute total expert. I'm actually arranging, and I'm not joking, I'm arranging to fly to Canada and go to a fracking site while they're fracking. Going to the oil sands of northern, like the Arctic Circle of Canada, where the oil and tar sands are, and go on site, get a tour, touch the equipment, see the men, see the trucks, see the water, and watch the whole process. Then I thought, you know what? I should follow that up. Maybe I'll go to Venezuela. Maybe I'll go to the Middle East. Maybe I'll go to Texas. I know a few different projects going on in Texas. How is Texas different? I'm like, man, let's go. Like, so you inspire me to take it to another level. Okay? I'd love to go to Texas. Jordan, if you're doing a project in Texas, conventional or fracking, refining, although for that you probably need to go up to Oklahoma. Dude, I'm in it, man. I want to let's go. I want to touch an oil pipe, right? Say, hey, we need more of these, right? We need more of these pipelines. In fact, I was going to show the economics of a pipe. What does it cost to get oil from Canada to Cushing, Oklahoma? And why would it even matter? So, like, all I can say is the point of the webinars isn't fame. In fact, I would never want to be famous. I think that would be a curse. But boy, do you inspire me to improve as a trader. And I thank you for that. And that's why I show up every day. Okay? Whether I'm sick, whether I'm tired, whether there's earthquakes, hurricanes, tornadoes, typhoons, or simple travel. I've done these webinars on probably, what, 3 continents? 4 continents? Yeah. Anyways, because you're important. What we do is important. I think it might be important to you, but I know it's important to me. Okay? Cool. Anyways. So, one of the things we talked about yesterday in the day trading group is how important this move is here. Okay? And in fact, I bought it low and then I got out quickly. Whew, was that a good idea? But the thing is, this is a key turning point, could be a key turning point, in a potential change in direction. Maybe yen goes from fairly weak to fairly strong again. Or should I say relatively strong relative to other currencies. There's some seasonality to that idea. I think this year is different from most years, so I don't know how much weight that'll actually carry. But nonetheless, if it was a random year, I would say, right around now, I would be buying yen. Okay? So, it could be relevant. So you need to really get in your decision-making process. Do you think this will come down and around and then back up? If not in June, maybe July? Or is this it, man? Is this down to October? Okay? So what's the answer? I have no idea. Not a great answer, right? So this is why we do technical and fundamental. Now you might say it's all in the price. Okay. Well, if it's all in the price, then I wouldn't say it's quite, if you're measuring from where I did, I would say statistical analysis from this bottom to this top, actually to this top now. The uptrend is not statistically over. Okay? But a change, for example, would be very important. Okay? If we break that channel, okay, very important. Now, Joseph says, depends if you're bullish or bearish. Absolutely it does. But you also have to know, like, if we're dropping below this price, it's a real problem. If you're a bull. Okay? Breaching of this trend, so let's okay, right now we're dealing with this part of an uptrend. Just in there. Okay? So if we breach that, that is very important, technically speaking. Right? And so in that case, you'd be in the sell zone for July, and your low would be 90. Okay? Now, a bull would say they don't like what's happening, but they're going to respect the trend because maybe you're a trend trader. Okay? And you're looking for more like this. And even though and again, you might want to make that decision fundamentally. Okay? But the issue is both sides of that trade are probably somewhat correct. You're going to see probably a little bit of both until we find out which team is going to win. Sky Killer says, hey, when are the chart templates going to be ready again? Oh, when we're done, we might start even today or tomorrow. So what'll happen is if you're a member of FX Bootcamp, you'll be able to access those tools. Okay? Okay, fundamentally, normal fundamentals would tell me under current market conditions, down is probably the correct direction. Okay? But it was also down. Down would have been the correct direction this way. You'd say, okay, well, China is locked down. Australia is exporting less to China because of it. And so Aussie yen should fall because not only is that bad for Aussie, that's somewhat of a risk-off moment. But it went up. And then things kind of normalized. And then went up. And then maybe things are normalizing. And then maybe it goes back up, right? Well, that's for you to decide upon. And what we know has happened here is Bank of Japan yield curve control. So maybe they stop. Maybe they adjust their yield curve control. So now going back to this, you have to make a general decision first. We call that strategy. Are we making a lower low? Yes or no? Or do you believe we're going to make a higher high? Yes or no? And if you think it's sideways, you shouldn't be trading it anyways. Okay. Hey, I want to go back to Jordan's comment. Hey, I should go down to Texas. He said, come down to Texas. Jordan, can you set up and arrange for me to visit a drill site or a well site or a refinery? Now, Hunted Kid says, dump it. Okay, first of all, I'd say careful with the language. It sounds pretty amateur. Not that you are. I'm just saying there's no rationale. It's an extreme point of view. What do you mean dump it? So more like, let me know why you think that would be the case. Okay. And sort of like what time frame, what target. So if you're like, well, Wayne, Bank of Japan is going to fail at yield curve control. Seasonality will take over because that's what normally happens. And by the end of July, we should be back at 90. I'm like, okay, so something like that. Gotcha. But like, dump it doesn't help me. It doesn't mean anything. Okay. Everyone, all right? That's my Porsche mechanic. Ugh. Does anyone want to know what 8 fuel injectors cost? First world problems, right? First world problems. All right. Okay. CAD coming down. Same issue. Now you'll notice that the issue is the same across the board, but they are different setups. Some are more extreme than others. Some are more consolidative than others. Some are more bearish than others. Some are moderately still bullish. Okay. And so this is, of course, a problem. A lower high is bad. So you could trade it this way. And if you did, I get it. Or you're looking at it at a higher time frame, and once again, you're thinking, So we're still in June, and I think next week is still mostly June, isn't it? And then really, so today is the swing trading group. Okay. Joseph, no, I have a Magnum by Tech Art, so it's modified and there's no warranty. By the way, if you like cars, this is Tech Art. So you can buy. Do they even have cars? 911s. So here's my. So they take Cayennes and then they modify them. Gee whiz. So they don't have any, like, so how interesting is that? They just don't have anything. So I have a Magnum. It's just funny. They don't have none for sale. I'd say that one's not even particularly nice. I've seen way nicer than that. So anyways, heavily modified Cayennes. On mine, the wheels and the brakes are redonkulous. But anyways, no. Actually, I have these. So I have this. Mine are black though, because it's murdered out. But anyways, yeah, forget it. Forget it. There's no warranty. When will it begin? And well, I don't know when it'll end because I'm just going to keep building until I stop building. Okay. When will it start? Early to mid-July, depending on how my life pulls together, but basically in the next 2 or 3 weeks. So it's either the 6th or the week after. We've basically did the first 2, and they're really nice. Like, I'm spending a lot of money on, it's not just me and a basic PowerPoint deck. It's a hell of a lot better than that. So I think you'll be impressed. So we're essentially done the deep content of the first 2 lectures. I want to obviously modify them and add some stuff to it. And then we're working on to the next thing. But I've probably spent 40 hours of my time already just sort of buying books, reading books, watching things, brainstorming. What kind of course would I build if I was building a course? And part of this project is I want to combine what we do at FX Bootcamp in general, trading and markets, whether it's stocks and bonds, crypto, futures, Forex, combine that sort of market knowledge with macroeconomics, which I did a macroeconomics course. So that was sort of, again, a training of my brain. And then doing a deeper dive in oil. I'm considering doing a deep dive in, I want to take a class on farming. There's like a 6-month class, maybe a 1-year class on farming and learning everything there is actually about the actual job of farming. But anyways, and then obviously I have the other stuff in my brain. So I'd like to be an expert as much as I can on growing grain, for example, but then trading it and hedging it and all that kind of stuff, which Series 3 has already covered. But taking all of this data, not only just making courses that you guys can join and learn from, but then making a succinct, detailed class that I could teach at Harvard about trading, financial assets, whether it's stocks, bonds, commodities, right? Commodity futures, Forex, all of that kind of stuff. Because to me, I've always thought about macroeconomics. It always comes down to money. We measure everything in money because it's a unit of account. So if I'm trading oil, wheat, soybean meal, gold, or USD, to me, it's all money, and it's all connected to macroeconomics, supply and demand, and the flow of cash. So you're actually helping me build a very detailed course that I'll likely teach at Harvard. White tech art, not Mansory. Well, it was for sale, so I bought it. Okay. And the other part of it, William, is at the beginning of COVID, the guy that owned the vehicle must have been over leveraged. He put a ton of money into this vehicle, and I paid pennies on the dollar. Hey, man, I was liquid. He wasn't. Cash is king, baby. Back when 2008 hit, I bought a Mercedes AMG 55 Cabriolet. And it was like a $120,000 car. I think it was still worth about $67,000 because it was a few years old. I bought it from the dealer. He already shut his dealerships down, his side businesses down. And and I drove to his house in North Atlanta, and it was a small palace. Like even I used the restroom while we're doing the paperwork. I'm like, hey man, because I was there for a few hours, and all of a sudden I'm like, hey man. And so I used even, he had 12-foot ceilings in his, bathrooms, right? Like he wasn't a starving dude, but he was about to lose his house. This is the worst time of the market, right? The worst part of 2008 financial crisis. And he said 3 other people were out there to buy the car at $50,000. Remember, it's worth $67,000. A few years later, or earlier, it was $120,000. But they couldn't get credit. They all wanted to use a bank to get the money, and the banks were not lending money. And the bank was about to foreclose on his house. And I saved his ass I bought it for $20,000 cash. Hey, cash is king. Liquidity, man. So you got to find the deals. Okay. Okay. Trader in every respect. The greatest trade I ever did is I told my wife, she was, we had a toddler. He was just starting to stand on his feet and hang on the side of the couch and cruise around the house. And another baby my wife was nursing. just a couple of weeks old, a few weeks old. And I said, that's it. I told my wife, we need to sell everything and we need to leave California immediately. So I flew to Atlanta, Georgia, because we had some family here, but also I'd visited earlier, and the cost of living is significantly less. So I flew out here and I bought a house. My wife was still here. And by the way, my wife isn't a weak person. She's a trusting person. So she's there with the babies. I fly to Georgia, look at a bunch of houses, buy one. Fly back, put our house on the market. Sold it in a matter of a couple of days. We had 6 or 7 offers above asking. One of them was above asking and basically cash. We could close. The close was like 2 weeks, 15-day close. So we accepted that, sold the house, called the moving company, packed the shit up, got on a plane, flew to Georgia. 2 weeks later, I'm not even joking, 2 weeks later, the housing market crashed in California. Crashed. And then the stock market crashed. And the dollar got strong, and the yen got strong, and everything. That was the greatest trade because I put all in. So I always tell people, if you want to make a bold trade, how about this one? Tell your wife with a toddler and a nursing baby to leave her family and all her friends and move to the other side of the country. That's all in. Sell the house, sell all your equity, go to cash on everything, pull the plug, get the F out, we're gone. And it crashed. And I've known actually many people, there are a few boot campers still around that were there when I announced it, where I came on to FX Boot Camp, and I got the thing that I needed. I had talked about it for about 9 months, that it was coming, the crash was coming, the crash was coming, the crash was coming. Every day for 9 months I talked about it, but not yet, not yet, not yet. Then the thing happened. I went to cash on everything, dumped everything, sold everything, took the biggest risk. I basically even bet my family on this. And I was right. Tim was there? Awesome. One of the problems, though, is the housing market crashed, but I'm in Georgia, and it was 6 months later, and the stock market really hadn't crashed yet. And I was sweating bullets there. I was wrong. Okay? It was months after I got here. The housing market, at first it was subprime, and then it got worse, and then it got worse. And I'm in Georgia now 6 months later, and the stock market still hadn't crashed. And boy, did it crash. But I was sweating bullets. And then we went back in. Best ever. But that's hard. How did I make that decision? Technically, no. Fundamentally, yeah. Okay? You haven't gone all in unless you've pushed your family onto the table as well. There's some scene where drug dealers, the Colombian cartel is meeting with pilots, so they're going to fly the cocaine from Colombia to wherever, the United States or wherever, right? And they're negotiating and everything, and then finally the cocaine guy, he leans forward and he's like, I need pictures of your wife and your children. If you're going to fly cocaine for me, I'll pay you, but I need pictures of your wife and your kids. It's part of the deal. You screw me over, I kill them all. And you're like, okay, that guy's all in. Now, I wouldn't recommend it, but sometimes in life, the real world kicks in, and it does impact your family. Lucas says sentiment is a good indicator. This is no. No. The sentiment was not correct back then. Unless you're saying it was a counter, but then you would have missed the entire .com rally if you were doing that. But so obviously if I'm in Georgia, here's what I remember. I was at a grocery store. The grocery store had big TVs over the vegetables and the fruit. And they actually had the stock market on. Shows you how bullish the stock market still was. And it was a big update. And you got to remember, I'm sweating bullets. I'm kind of like that guy in The Big Short, right? Where he's just losing money. I'm right. So I dumped everything and I'm watching it in the grocery store, and it was a big day. The bell, so it must have been just after 4. They had just showed the bell close, ding, 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 and the floor is cheering, and everyone's like, "Oh, I'm so rich, I'm so awesome!" And then they interviewed somebody, and they asked, "Are prices too high? Should we be worried that the stock market is irrationally exuberant?" And he says, "Too much of a good thing's great. Too much of a good thing's fantastic." And I'm like, fudge, I got out. I made the wrong decision. I'm in frickin' Georgia. All my friends think I'm nuts. Because people in California think Georgia's still crazy racist, right? There's still Ku Klux Klan running around. So they're like, holy crap, you moved to Georgia? You moved to Atlanta? Really? What's it like there? Right? So I'm being mocked by my friends. I'm watching the stock market hit all-time highs. So I don't believe the sentiment was it's about to crash, but it did. Not a good feeling, by the way. Right? But anywho, so enough about me. It's okay, but maybe there's some history there that's helpful. Do I think we're about to go into something like that now? No. Okay, but have I been around? Yes. Do I have some scars? Yes. Okay. Yes, but I think that's a good thing. Okay, cool. So one of the things we talked about in the day trading group, and yes, that is another sales pitch. I don't know why you fight me. Why don't you just join? Okay. We talked about Swissy strength. Could be a portfolio building trend. Okay, what we talked about yesterday was Swissy strength. Okay. Okay. One of the things we have here are basic targets. I'm not going to go through the rationale because whatever. Don't have enough time. But these are all targets. Does anyone want to reveal whose targets these are? These are not necessarily my targets. We'll go to a weekly chart. Well, that doesn't fit well either. Got to really back out. Whose targets are those? Okay. These are targets for euro, Swiss franc, for the future. Okay. Last night, I think we're at like 103. Now we're at 101. Next target is 1. Then there's 198, 97, and 95. We went over this last night in the day trading group, and these are trade targets by Goldman Sachs. Isn't that nice? Okay. So anyway, since our meeting last night, it's down. Cool. Now you might say, well, Wayne, how do you know Goldman Sachs trade positions? Oh, I'm not going to tell you. Richard says going to parity, but that's 95, so that's below parity. Okay. Okay. I might argue 92. I might say Goldman Sachs is wrong. But anyways. Nice to know, though, right? Okay, let's look at the indices. Yen gaining some strength. Dollar's still all over the place. Could be bond yields, right? Hang on, I can't see. 10 year. No wonder that didn't work. Okay, 10 year. Let's look at some bond yields and see what's what. Okay. Yen's gaining strength. And yields are down below 25. Sweet. That's what's supposed to happen. Nice. Now, there has been some volatility in there. If you do a closer look, would you consider that volatility? Yields want to double, and something or someone is preventing it. Good to know, right? Citigroup. Richard has Citigroup targets. Yeah, I have Goldman Sachs, Citi, JP Morgan, Bank of America, Credit Agricole, a few others. So anyways, look at that volatility. Somebody's stepping in, huh? Okay, so looking at the last week, okay. So one of the things I talked about, I guess it was a week ago. I can't remember if it was Monday night. It might have been Monday night when we're in here, where I said, you know, look at as we get closer to 4. So, you know, I said 3.5, and then someone else said, no, I think we're at 3.25 already. But this idea that, you know, if we eventually move the 10-year to 4%, as we go from 3.5 to 4, it'll actually become an opportunity for some traders. Okay. So imagine some portfolios are down, right? Negative 20%. And they might have cash. And they're like, well, it doesn't beat inflation. So in nominal terms, however, guaranteed 4% is a hell of a lot better than what's going on now. And maybe bonds are so cheap right now, and in particular, if you're getting discounts on top of it, boy, maybe maybe you lock in 4%. Maybe it's something that you do. And then you're like, well, a 10-year T-note, well, you know what? You could do a 2-year, okay, a 5-year, but see, 2-year, not long ago, we had some backwardation. So if you go over the last month, look at this. Look at the dramatic change in yield. Okay. This might be people saying, you know what? 3.4 on a 2-year? Well, what if you thought you could face, let's say, another 10% drop this year? Another. So I'll list this as another. And next year, okay, another 10% from here. For the stock market. And you're like, well, I could skip all of this and I'll just lock in 3.4% nominally for the next 2 years. So that's what we were talking about a week ago. And somebody's buying bonds. Another way of looking at this is somebody, in particular, going back to the 10-year, it's sort of a rough, where's the 10-year? They put it here, interesting. Somebody might be saying that 3.5%, oops, well, hey, can you see that? 3.5% is what the Fed is actually going to do next year. Remember, what's being priced in is 4. And then some people are saying, you know what? Inflation is going to come down before July. Because remember, when we looked at the Fed funds futures market, okay, and this was during the FOMC meeting, we looked at the Fed funds futures market, and it said July of 2023, the market priced in a Fed funds rate of 4%. But remember, this is fluid. It's a negotiation. Some people might be coming in now and saying, you know what? That's wrong. By the time we get to July 2023, inflation will be significantly lower. It won't be at 8 or 9. It'll be at 5 or 6, and the Fed won't need to go to 4. They'll need to go to 3.5, and that changes the direction of the market. Now, we don't know if it's right, but that is some of that logic is probably what's happening. So this occurred around the 16th. Probably somewhere around that event. Okay. And around that event, the dollar dropped, rebounded, and is more bearish than it is bullish currently. With Sky Killer, what I'm saying is 4 was priced in, and now some market participants might be thinking 3.5 is the right number. So rates are falling. Now the Fed is raising rates, sure, but we're more interested in the policy. We already know they're raising interest rates, so that's done. And people have been investing like it was going to go to 4. And remember, that's not an opinion. That's by analyzing the Fed funds futures market. They tell you July 2023, interest rates will be 4%. So now if the market says that might be wrong, it might be 3.5, then the dollar's overvalued because people had already priced in 4. And then they're like, okay, the Fed rose by 75 basis points, which here was off the table, and here it occurred. So now they're like, okay, the Fed is going to kill inflation. We won't need to go to 4 because they're front loading it, and they'll cause the recession a little bit earlier, and therefore they won't need to raise to 4 because inflation will be going down, unemployment will be going up. They'll destroy much of the demand, and by then the supply chain will be fixed, and whoop, it's overvalued. Okay? So that's where you're like 4 is priced in, and now 4 is being priced out, and 3.5 is being priced in, which means 4 was too strong. 3.5 is the right number. And now, of course, this could change. Why would this change? See, July CPI comes out 9.1, and they're like, shit, it's back to 4 again. Okay. Anywho, all I'm trying to say is watch bond yields, whether it's the 2-year or 10-year, and try to do some basic analysis, correlation, and what is happening. In this case, Fed Fund futures 4, Fed Funds futures less than 4, and then if it's 4 again, which is different than just trading a Fed announcement. That's not fundamental analysis. Okay? The release of CPI in of itself isn't fundamental analysis. That's just that's a news event. It's a data point. So then you want to look at the trend of CPI, what it means to the Fed, but the market is trading what it means to the Fed. So you have to pay attention to CPI, the trend in CPI, what the Fed would do, and what the market is pricing in. And when you do all of that, that's called fundamental analysis. This is why sometimes good news is bad news, and sometimes bad news is good news. And it feels like gobbledygook to most people. Is because they're not doing it right. Their level of analysis is elementary, and they need to have a higher level of analysis and think forward. So right now in oil came down hard because of what people think is going to happen next year. Well, next year hasn't happened yet. Okay? So the market is always somewhere between 6 and 18 months forward looking. All right, we did all this. Sorry about that. USD. Now, you know what? I don't want to do USD. I want to do commodities. Okay. Oh. I have an order in here somewhere. Oh. Yeah, I have an order in there somewhere. Gotta be careful. But it's the Weasel. Okay, I have an order in there. Not on this account. Okay. Maybe. End of the quarter profit taking zones. Yeah, although for many professional traders, the end of the quarter's already occurred. So what is actually, I think, happening more likely now, Skykiller, is building of July's move. So people are trying to jostle for position for the third quarter. And so sometimes you get moves like this where it's double bottom, let's say, and then it comes up, and then July happens and it comes down, and then it comes back up again, because it depends on when you want to deploy your cash. Okay? And some want to, so let's say you sold much of your position in the stock market recently. And the head of hedge fund services for Goldman Sachs said the vast majority of his hedge fund clients have already gotten out of the being long the stock market, and they're either in cash or they're shorting the stock market. But they're not holding those positions. And they're not like Kathy Wood or something like down 75% and they still own it. Okay. Hedge funds don't do that. So he said the vast majority of them are already out. And they're just doing whatever they can to make money. But they're not making long-term bets. They're out. They've cashed out of that long ago. And now they're just trading like beasts, right? Now the thing is, so now if you're in mostly cash, you have a decision to make. Do you want to have the cash deployed? So let's say this is July. Oops, that's supposed to be a vertical line. Okay, I guess I'll use a vertical line. Okay, so let's say this is July. The decision is, do you want to deploy the cash before July or after July? The issue is, at the end of June, so on this day, right here on the left side of the border, you have to write your quarterly performance report to your clients, which might have your accountant come in. So you have Ernst & Young come in, audit your track record, your history, your track record, and report, okay, all your statistics of your track record. And part of that would be how much cash have you deployed and how much are you sitting on. And then it gets reported here to your customers. And your customers show up and you're like, what the hell? I'm paying you $2.20 to sit on cash? Screw you, give me my money back. So for many of them, they might have gotten out on the way down, but they, right? So this is quadruple witching, and the next day was up. Okay? And you might look at the stock market and it's up. Okay? That's the day options and contracts expired. What does that mean? Cash. If you're in an option position, you're out of an option position. If you're in a futures position, you're out of a futures position. So now you got to decide, do you buy the new front month? What are you going to do the next quarter? And you don't want to, I don't think most hedge funds want to say, dear Mr. and Mrs. Client, we're sitting on cash. So they want to deploy. They'd rather say, oh, we have such sophisticated strategies going on, we can't even explain it to you, but we've already implemented them, so just sit tight, it's going to work out. Okay. Cool, I think I caught that. Look at, go! So this WTI, it just moved the equivalent of 50 pips. If on a euro dollar. I'm like equivalent, right? Because obviously WTI is not priced in pips, but it's cents. And that is in like 5 minutes. And you'll see the summer, 50 pips could be a good day. It could be a good couple of days on euro dollar. And yet in 5 minutes, you can cover a whole day on euro dollar. Another reason you might want to start trading WTI with me. Okay. But do you see the portfolio management issue? Do you see how portfolio management could impact, for example, what the stock market does on certain days? Not every day. But it does matter, right? If a hedge fund, if they get all the team together, all the managers together, and they're like, you know what? We got too much cash. We got to deploy some of this somewhere, even if it's buying some bonds. You see that? They're like, let's just buy a bunch of 2-year bonds. We're going to collect 3% on them. Okay? Okay. And better than being cash. And in 2 years, inflation is going to be probably back to 2 or 3%. And so you're like, this is an inflation hedge. This is something good. Risk-free. And we're going to collect 3% no matter what. Hold it for 2 years. Just boom, just buy, right? Whatever, you see? But it's think of it's like redemption protection. And hedge fund managers worry about redemption all day and all night. Every time your client calls, you're like, oh, dang it. They call and they're just like, hey, just want to see what's up. I'm in town. Maybe we should have dinner. You're like, yeah. Because you're worried every time the phone rings, you're worried the client wants their money back. Talk about call reluctance. Okay. Okay, Bitcoin hit 20 again. Did you buy it? That would be the price action play if you were going to buy it. And of course, if you're a bottom picker, your play is down in here. Okay, so the basic price action. And by the way, we have a course at FX Bootcamp on price action. Up, 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 down, down, buy. 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 Up, 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 up. Okay. The day trade, and yes, we have a day trading course at FX Bootcamp. It says this is your buy zone. Buy it at 20,000. Target 21,000. Conservative target. Aggressive target 21,500. So you would have bought it last night in Asia, and you're going for that. Does it mean that's what's going to happen? Hell no. But at least you can jam your stop now. Okay? And as I say, hope is not a strategy, but praying never hurts. Okay? So you might have a stop in here, and if this holds, you might add to the position. Hoorah! Okay? Ted says, hey, will the Powell testimony have an impact? Historically, they say the exact same thing on the second day as they did on the first day. So we're not likely to learn anything new. And we didn't learn anything new yesterday, except a soft landing is going to be tricky, which means what? We're going to see unemployment rise. Now, I imagine you paid attention to weekly jobless claims that came out. And there's no dramatic sign of people losing jobs yet. But when it's 400,000 a week, that will be interesting. Okay. Come on, WTI. Giddy up. Let's go. Gold, I've given my 2-year outlook to FX boot campers. And by the way, if I didn't cover it in the swing trading group, my 2-year outlook for gold, then please ask me tonight in the swing trading group. And I will give you my 2-year outlook. Just want to make sure I shared it with everybody. Okay. And yeah. Now, if you want to take some seasonality, if you love gold, let me give you some juice. Normally, okay? Normally, and I believe I covered this at the FOMC meeting, so you can go back and watch because it's recorded. I covered it here, and I said normally I would buy it, and I think I actually had it. I think I actually bought it, and then I bailed. In a normal year, under normal circumstances, this is the right time of year to start buying. Middle of May to middle of July. Okay? And if you recall what I said as I drew a line, that's average. And then if you go one standard deviation, if you will, a little bit before average, a little bit after average, because remember, average almost never occurs. So it's either below average or above average. It's either sooner than normal or later than normal. So you create a range. And you say in this period of the year, a buy and hold strategy typically pays off. Okay? However, this year's not a typical year. So it might work, it might not. But if you wanted to buy gold anyways, XAU, then you might take that into account and say, okay, well, okay, all right. I will try to fix you. Okay. So kind of food for thought. I'm going to go back to this and explain it sort of differently than just going through pairs. It seems that right here, the Swiss National Bank changed their policy, and that was important. Remember, the fundamentals are not important. We only care about fundamentals so we can try to figure out what the central bank might do next. That's all that matters. So they changed their policy that they've held for years and years and years and years. That 1 second of that one particular day. Okay? And so, I don't know, what do you think about it? Okay. Cool. What do you think about it? What are you going to do about it? I'm just going to leave it at that. So with dollar, you want to watch bond yields. With yen, you want to watch yield curve control. And with Swissy, you got to watch the European economy being negatively impacted by, I would say in particular, high food and energy costs. That's what we do. And if you do it well, people much too good looking for you will suddenly adore everything that you do. You will become taller and thinner and funnier if you can get all this right. Everyone will laugh at your jokes. That's what money does, honey. Right? That's what money does. By the way, that Swissy's strong. Look at that. Look at that euro. Okay. Anywho. So Richard says, I'm still in your macroeconomics class, and it's class night. Very nice. Very cool. I enjoyed doing that course a lot. I mean, obviously, I love macroeconomics. And I like the idea that, you start to understand the macroeconomic decisions like, should we do a Build Back Better? This was something proposed by the Democrats. Should we spend a lot of money on infrastructure? And you're like, oh, that will shift the steady state of the economy and will produce a return on investment. And when you start shifting your steady state, like this is your thought process, and that will create more output, shifting the steady state to the right. You now have a much higher idea of economics, certainly higher than most politicians. Of course, the reason it didn't pass is there was, I think, 800 million, or let's say 100 million of actual infrastructure projects, which would be good and would shift your steady state and produce higher output and increase the standard of living on the long run. But then there was 900 million of crap. So it didn't pass. So you could say, well, I've analyzed the proposal that the government's making on their spending, and I like this part because of this, and it'll do this, and it'll have that, and it'll do this. But this other stuff I don't like because it's unproductive money, and it will have the opposite effect. I want you to be able to break it down so that you know which company, or in this case, country, which country should you invest in? Which one is hurting? Which one will be better, which one will have a year better than the last. You can analyze why China used to have 10% growth, now only has 4% growth. And you're like, oh, well, we've already made the infrastructure investment, and now depreciation is catching up with their levels of investment and locking in a steady state. And you know the difference between mature growth and catch-up growth. So now you would say, well, well, 4 or 5% is actually pretty good for China, because China is different than it was 10, 20, 30 years ago. And all of a sudden you're breaking down these concepts. They're, pretty important concepts if you want to understand economics. So like, the question is, what should you be studying to learn fundamentals? And you're like, well, you got to know economics, because otherwise you're just reading data, but you don't know what it means. Okay? Otherwise you're just a computer. A computer doesn't know how to read. It just looks at the numbers. In fact, it doesn't know if it's a number or a letter. It's just a squib, and it interprets. Is this a number or a letter? Is this a combination of letters? Oh, it's a word. What does this word mean? And it just, right? But it doesn't understand. Right? I was advising an artificial intelligence trading firm on their machine learning last week. And they were telling me, oh, well, you just dump a bunch of macroeconomic data into the machine and it'll figure things out. And I said, well, how do you deal with the fact that in 2008 we had a recession and the dollar got strong, and now we're going into recession and the dollar, right? We went into a deflationary period in 2008 and the dollar got strong. Now we're in an inflationary economy and the dollar's getting strong. Which one's right? How does the machine learn? They're like, oh, well, we don't know. You just dump a bunch of data into it. Oh, you're analyzing the yen. Are you incorporating yield control into your machine learning? Does it understand what's actually happening, or is it just looking at stuff based on what used to happen, but what used to happen is not happening? Something new is happening right now. How are you teaching your machine to think this way? And they're like dumbfounded. Can't cut corners. So at least I can teach you macroeconomics. And when I ask someone else, when I'm asking the programmer, when you're sitting there with Python in front of you, typing in all the nice little code, how are you teaching it the importance of yield curve control? And when they adjust yield curve control, how does it know if the press release came out to say that they're adjusting? Or is it just going to lose money for a while until it figures out the new pattern? Well, you don't want to lose money for a while, right? So like, I don't know if you can, but I'm not a machine learning programmer. But when I'm asking them, they're not, right? You get these blank stares. So once you learn economics, you can think forward, not look backward. Because if you look backward, you'll find out what's happening now doesn't make any sense. So that computer might be losing tons of money now. When I noticed the shift in seasonality, remember that back in November? First thing I did is I went cold conservative. I'm like, it ain't working. The seasonality is going to crap. The opposite of what should be happening is happening. Something's different. Something's changed. Pull the plug on risk. Number one goal, don't lose money. And then when the market comes back and you understand it, get back in, get going. What you don't want to do is 40% drawdown. And that, I think that's what the machine would do, because it's not thinking forward. It's trying to look at what used to happen. But what it doesn't understand, or maybe what the AI guys that are managing this fund, what they don't understand is what happened in the past is not what's happening now. And they're trying to extrapolate from the past to predict the future. And no. You have to understand the future to predict the future. So be careful, but remember, you're 1,000,000 times smarter than the computer. Because the computer's got to lose to learn to not lose. You could just stop and adjust by thinking forward. Anyways, thank you for being in the community. We make the world a better place. Hope you like the fact that I got my Forex.Today colors on. Peace on earth. May the pips be with you. May our profits be above average. Thank you for being in my life, and thank you for working hard at this thing we call Forex. Together we will survive and thrive. If you're in my swing trading group, I will see you at 4 p.m. to plan out July. We're going to plan out all next month today. And also, if I still have the link, please sign up for the summer school. You will become an expert in the energy complex. I mean, like a real expert, like a deep dive, understand pretty much everything about energy. Oil, natural gas, electricity, finding the stuff, sucking it out of the ground, refining it, the history, the politics, the legal contracts, how to trade it, seasonality, supply side economics, demand side economics, cap and trade, like the externalities, which are the costs that can't go onto your balance sheets or your cash flows, things like pollution. So we all want less pollution. I don't think anybody wants more pollution. You might be anti, quote unquote, environmental, but nobody wants more pollution. So how does that get done? And when the government says less pollution, what does it mean? What was the actual cost? Remember, on Biden's first day, he killed the Keystone Pipeline. What was the cost of that? There's a cost, an exact cost. Okay? And was it good or bad? I can tell you based on cost analysis, that project would pay for itself in 2 years, and we'd have lower oil prices than we do have now. Why? It's basic. You'd get more oil from Canada, and you'd get more oil and gas from North and South Dakota. You'd just have more of it, and it would get here cheap. Right now, Warren Buffett's making a killing because they're putting the stuff on trains to get it down here. Well, it's almost not economically viable. It's only viable when oil prices are at $100 or higher. Well, guess what? That's why oil prices are up $100 or higher. So it's just like, dude, this is a man-made disaster. But we can break it all down non-politically and just say, well, what was the cost? And you might find stuff in these conversations and discussions that you'd never thought about before. And when we get to those points, that's when you're becoming an expert. So sign up, man. I'm already doing it. Okay? Or you can wait and take the course at Harvard. It'll be about $5,000. If you want to do that, take the course at Harvard in 5 years when I'm a professor there. You can sign up, take the course there, or you can pay the $500 now. 90% discount. Peace on earth. May the pips be with you. May our profits be above average. Cheers.